And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below if you've not yet done so. Please subscribe to both the YouTube channel and to the podcast. And if you think someone might find this of interest, shocking, as shocking as that may be, why don't you go ahead and click the share button and share it with them as well. So, should you buy an investment property in Israel? That's the question. That's a question I've spoken about it before, but it's a question I just got twice, I believe, last week. So I figured I will speak about it again. Okay? For many people, a property in Israel feels like a rite of passage. You got to do it, right? You're not fulfilling your potential if you don't own property in the Holy Land. There's a deeply ingrained belief that Israeli real estate only goes up, right? We like real estate. It feels tangible. It's safe. You can touch it. You can see it. But as I tell my clients all the time, don't fall in love with the narrative, the numbers. So I want to speak to you today about the pros and cons. And I'm not judging, all right? I just want to go through the pros and the cons of buying an investment property in Israel using data so that you can make informed decision. I'm not talking about whether you should buy a property to live in. That's a different discussion. I'm talking about an investment property, an additional property, or just to buy a property to rent out. Okay? Over the last couple of decades, Israel's housing prices have risen dramatically, right? We all know that. Long-term data from Israel's Central Bureau of Statistics shows substantial cumulative growth over the last 25 or 30 years, with a caveat, I may say, that if we go back in time in the years of around 2000, when, God forbid, but buses were blowing up in Israel, there were, choicest properties in choicest of locations dropped by 25%. But it's just a blip, right? Just like we've spoken about many times about the stock market. You have stock market massive drops, crashes, but markets come back and we don't even remember it. So it's the same thing here. Even recently, despite higher interest rates and geopolitical uncertainty, i.e. a war, the market has shown resilience. In 2024, average apartment prices nationally were around 2.3 million shekels, with certain regions seeing mid-single digit to even low double-digit percentage increases year over year. That has slowed. Last year in 2025, I believe that, single-digit growth was the max. Flat to single-digit growth is what we looked for. But the fact that we're talking about 2.3 million shekels, especially now that the shekel has appreciated so much against the U.S. dollar, you're talking about, quick math, $725,000 for the average price, which is crazy. That doesn't mean that everything costs that, right? You can certainly find properties for, a third of that. Why is that? Why is it, right? Well, simple economics. We have a limited land supply, strong population growth, and consistent housing demand, both internally and from foreigners, those who are looking to have a stake in Israeli real estate so that one day when anti-Semitism blows up, they'll be able to have a place to run to, and those also who are immigrating to Israel and making aliyah. These are all things which are contributing to the appreciation in costs, let's say. Israel's population continues to grow faster than OECD countries. That structural demand supports long-term housing pressure, especially if they don't free up land and they don't build anything. And as they say, the crane is the national bird, especially because of the war, things really, really slow down. I mean, there's still, I would think most people would agree that there is some kind of a shortage in new housing. So historically, Israeli property has appreciated, but appreciation alone doesn't make something a good investment today, or past appreciation doesn't make it for a good investment today. Let's talk about yield, right? Most times people want to buy an investment property. That's what they're looking for. Nationally, gross rental yields in Israel are around 3%. If they're above a certain amount of money, that becomes taxed as well at either 10 or 15%. So keep that in mind. And in cities like Tel Aviv, Jerusalem, it's often below that 3% mark. Expenses, maintenance, vacancy, management, the aforementioned tax on rent, your net is going to be closer to 2%, right? That's not something to write home about. So, you're buying a 2.3 million shekel apartment, and afterwards you're getting 46,000 shekels in rent. And that's if you bought all cash, right? And we're not talking about financing. While everybody would like to get 46,000 shekels in percentage terms, that's nothing to write home about, right? That's for sure. Compare that to other global real estate markets where 5 to 7% yields are common, or a diversified stock portfolio that historically has produced much higher long-term returns. You can also find, just CDs, which are going to get you between 3.5% and 4%. So 2% doesn't sound so great. So what's that mean? If you're buying for income, Israeli property is probably not necessarily the greatest thing to do. It's low yield. The name of the game in Israeli property, as we've spoken about, is capital appreciation, meaning you buy for 2.3 million shekels and one day in the future it's worth 4 million shekels. But obviously it's not guaranteed. If you're financing, interest rates matter, right? Borrowing costs have risen significantly over the past few years, and they've then plateaued, but they haven't really come down. We had one rate hike by the Bank of Israel. We might get another shortly because the inflation data came in pretty good, meaning weak, a low number, I should say. So that should spur the Bank of Israel to cut, but they've even announced they're in no hurry to bring down rates, which means that financing rates still remain sort of elevated. Maybe not necessarily on a historical basis, but certainly over where we were 6-7 years ago. If your rental income barely covers your mortgage and you have a vacancy, so that becomes problematic and stressful. Leverage is great until it doesn't work so well, right? Again, I'm not talking about taking a mortgage for a primary residence. It's a different conversation altogether. This is for an investment property. If you have to take a mortgage for a primary residence, and that's, where you're going to live and you can afford it, and you can afford the monthly payments, so that's great, right? But that's not what we're talking about here. Now, I don't want to sound too negative. There are certainly advantages of buying property here. First, the stability. Israeli residential real estate has historically proven to be resilient. Again, during turbulent periods, people still need a place to live, right? Structural demand, like I mentioned, Tel Aviv and Jerusalem have strong rental bases. You have students, you have young professionals, you have immigrants. Vacancy risk is often manageable in high-demand neighborhoods. I would add a third thing. Because of what they call hitchadshut ironit, which is tearing down lots of older buildings and building larger new buildings. I know in Jerusalem, that's going to cause an issue because all the people who are going to be moving out for a couple of years while their new buildings are being built have to have a place to live. So certainly, I would assume that rental prices will probably continue to have strong demand and probably keep going up, actually start going up significantly because of that. But people aren't talking about that so much right now. Another advantage is an inflation hedge. Rents, and values often adjust over time with inflation. For investors worried about currency debasement or long-term shekel exposure, real estate can provide some psychological comfort to that, and I would say behavioral benefits as well. For some investors, real estate enforces discipline. You don't check its price every day. You can't click refresh on the computer to see what your apartment is now worth. And that is great because it reduces emotional decision-making, right? We always speak about long-term investing. Well, that reinforces long-term investing, that's generally how slow and steady is what wins the game, usually. We're not talking about flipping properties here. The downside, obviously, first and foremost with real estate as an investment property is going to be liquidity, right? If you need cash, you can't take out the saw and go cut a bedroom and say, here you go. You've got to sell. Real estate transactions are slow. They're expensive. There are fees. There are taxes to pay. And if people know that you need to sell, then the price adjusts for that fire sale situation. Second, we have concentration risk. If you have all the money that you have and you're putting it into one apartment, you're not really diversified, right? That's incredibly concentrated. So keep that in mind. Then you have regulatory risk where tax policies change. Israeli real estate used to be tax-free over the last few years, a little bit more than that, but they started taxing rents above, like I said, above a certain level now become taxed as well. And they go after people. There are a lot of people out there with Airbnbs who think, oh, it's tax-free until it's not. And then they're up the creek, let's say. Opportunity cost, right? Being your net yield being at 2%, you certainly have to ask, can I make more money in other places, right? With diversified global portfolios, REITs, if you want real estate, all kinds of different alternatives that can offer better risk-adjusted returns. That's important, okay? There's also something emotional, I would say, that's happening here. In Israel especially, owning property feels like security, which is important, permanence. But that's emotional, and you have to keep in mind that that's emotional. Sometimes the best investment decisions isn't the one that feels the most familiar. It's the one that fits your overall financial plan. So in summary, what would I say? I said, if you want to buy, you should have lots of investments, right? You should have a long-term horizon. I would say at least 10 to 15 years. You're comfortable with modest cash flow. You're willing to be a landlord, right? When you get that call in the middle of the night that a pipe bursts, it's got to be cool with you that you're going to have to take care of that kind of thing. You're not overly leveraged is important, and it represents a reasonable amount of your portfolio. If you're buying because, well, Israeli real estate always goes up, that's an assumption. That's not a hard and fast analysis. In summary, I would say there's no question that Israeli real estate has created lots of wealth for people over decades. Today's environment is different because higher entry prices, right? As we mentioned, the downside for all those people who made all the money in the past is now those people trying to get into the market are facing exorbitantly high prices. You have modest yields and right now, again, higher borrowing costs as interest rates really aren't coming down, right? It's not a bad investment. Keep in mind, it's not guaranteed. It's an investment. One option amongst many different investments. And I would say the question is, and the question I get, right, is Israeli real estate good? I don't know. The question should be, is it good for you? Giving what your goals are, what your risk tolerance is, and breakdown of your net worth. And how is it broken down, whether or not real estate should fit into it, right? If you're considering it, run the numbers carefully, compare to alternatives, and remember, smart investing isn't about following cultural narratives, right? It's about disciplined decision-making. If you need some help to see if it makes sense for you, feel free to reach out to me. You've been tuning in to the Aaron Katzman Show. We speak about your life, your money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody may find this of actual interest, why don't you go ahead and share it with them as well. Thanks so much for tuning in, and we'll speak to you soon.